What is up, everybody? It is Friday, August 27th at 1:30 p.m. Eastern Daily Time. When I say Eastern Standard Time, the Europeans get very angry that I have sent them on a wild goose chase for the live stream timing of the show. Every Friday, Bullish on Bitcoin is the way we've rebranded this show. I love to bring on at least one guest. Last week, we had Tone Vase and Sam Trabucco from Alameda. I like to bring on one guest, and we like to talk Bitcoin. But before we get started, something that I'm extremely excited about is that we have an amazing new sponsor, Superbid. I've been talking to these guys for a long time. You can find them at Superbid.io. All the information you need is in the description right down below, as well as the link, which I encourage you to click on. Boy, I'm so excited about this platform. So awesome. Is first, I used to be in the music business, a lot of you guys know. And actually, as a side job when I was DJing, we used to work on ways to bring the fans closer, super fans really closer to the artists that they love by giving away experiences and different things like that. And they've made that possible here with NFTs. It's absolutely incredible. So basically, any celebrity, influencer, entrepreneur, basically anyone can go on their site with no knowledge of Ethereum and gas fees and all those things. They can directly upload what become NFTs, their photos, their videos, experiences, and sell them to the general public. And the general public also doesn't have to have knowledge. They can just use a credit card-based payment system, really abstracts away all the gas fees and all the issues that people worry about. It makes it just as simple as buying and selling. And so also these artists and celebrities, they can go on there and they can sell experiences with themselves and physical items that are attached to an NFT. So it could be, your favorite NBA player's gloves, basketball, your favorite baseball player's glove, your favorite boxer, their gloves. Logan Paul is a partner with them. They actually sponsored the Logan Paul and Floyd Mayweather fight. You guys, please click on the link down below. Check it out. They're coming live in September. I'm super excited. But now we're going to move on to this show, Bullets on Bitcoin. And I want to welcome today's guest, which is Dan from the Chart Guys. He's a trader, he's an analyst, he's a YouTuber, he's an educator. Basically, this guy has a lot going on, and really excited to hear his perspective on the broader markets and on Bitcoin in general. So what's up, Dan, man? Welcome.
Hey, Scott, thanks for having me.
So listen, we were just talking right before sort of about our stance. I love to at least get an idea before I start talking to someone, whether they are in fact bullish on Bitcoin, or as I said, if the title could be on certain days, it can be a misnomer, right? But I think when we zoom out, generally, I'll agree to be bullish. But what are you thinking about the market as we're going into the weekend?
Yeah, I have been admittedly a little bit iffy this past week, just because we've gone, 70% on Bitcoin, and we haven't seen weekly consolidation. It's just been straight from 29 up to 50. So today is a big shift for me, just because we had Powell speaking and the stock market reacting very bullishly to what he had to say. And obviously, crypto is up for its sixth green Friday in a row. So the title of your show every Friday is certainly very fitting. And that is having us coast into the weekend with a bit of tailwind behind the bulls here.
Yeah, it seems that way across markets as well. As you said, obviously, stocks reacted well. Jerome Powell was dovish, to say the least. I mean, it's very clear they have no intention of raising interest rates anytime soon, and that we have not fully recovered. I just saw this comment already. Sorry, Scott. Dan is my number one go-to guy for trading. That's fine. That's fine. I'm happy to play second fiddle and sloppy seconds. There's no problems there. So, Dan, I would love for you actually. Can I just bring your chart up and we can start talking about what you're seeing?
Let's do it. So this is the monthly time frame for Bitcoin, and I'm primarily a stock trader. Crypto is secondary. It definitely gets my full attention at times, but there was a setup in growth stocks that had me watching for entries on this monthly chart for Bitcoin. And we could see Bitcoin had its, big time breakout to all-time highs and a very steep retracement that had everybody feeling the fear, but we knew to be scouting for a monthly higher low from where we came from. And I used the monthly EMA 12, which is this red line. And honestly, I was just thinking back to all of the growth stocks that I watched do this exact same thing. And the one we'll use as an example here is NIO. It's just an EV play, electric vehicle. So massive breakout to all-time highs, big time pullback right off monthly EMA 12. And then we set that monthly higher low. So this chart is essentially looking a whole lot like Bitcoin, but from the future, so to speak. So here on NIO, now I'm watching, are we going to set a monthly lower high and tighten up? And is that coming for Bitcoin as well? And honestly, I think that is the more likely scenario, because when you establish a range as wide as we have, equilibriums with lower highs and higher lows and tightening ranges are the more likely scenario. Now, if you're going to see the less likely scenario take place, which is just V-shaped to a new all-time high, you have to see increasing bull volume. And in my opinion, it's going to have to take a news catalyst. And maybe it's going to be the ETF that everybody's been waiting years on. If there is that catalyst towards the end of this year, I could see that being, a scenario that leads us to increasing volume, and the less likely scenario, in my opinion, and a new all-time high.
So you're basically looking for a symmetrical triangle here to form some sort of pennant and lower highs, higher lows, and then it'll resolve to either side, but sort of an agnostic triangle, and then see what happens if it breaks resistance or support.
Absolutely. In the absence of increasing volume, that is the most likely scenario for me.
Yeah, the volume profile, to me, I agree. I'm looking for increasing volume. I'm just always hesitant when I see that one huge red candle. It becomes very hard to actually compare the future candles to it, right? So sometimes you have to default back to what was volume like 6 months ago when it was normal or sideways. And I always find that to be a bit challenging, which means, like you said, we'll probably have to see many weeks and months to actually get an accurate gauge of what that's going to look like to be able to fairly judge it. I mean, there was so much volume on that drop. It's absurd.
Yeah. And you can zoom in, whenever I need more details, I do zoom in, but you are correct that it was so fast and hard that it's not a whole lot to be going off of.
Do you have any theories on what caused that drop?
It was due. People point to Elon Musk or whatever. I think that's just noise. It was a catalyst. It was a little push for the chart to roll over. But I was a little bit cautious, and the monthly time frame was just so darn extended. I started exiting positions in the upper 40s and the lower 50s. I was a bit early, but I knew that monthly consolidation was coming. And that's one thing that has me a bit cautious in the S&P 500, because right now, SPY, which is the ETF for the S&P 500, we haven't seen monthly consolidation in 9 months. So I'm sitting here saying, if we see fear in the broader market, that could be a potential catalyst. If SPY were to see monthly consolidation within the next couple of months, that could be a potential reason that Bitcoin sets a monthly lower high compared to the previous all-time high and gives us that tightening pattern.
I'll take at least as long as we get higher lows. I'm perfectly happy for now. But interesting, sort of to the point you just made about SPY. Obviously, that chart doesn't require much explanation. If you look at it, it's basically straight up, right? And a parabolic advance. But even Buffett today, his proprietary indicator, the Buffett indicator, which everyone knows is basically just the value of all stocks versus GDP. It's a very simple metric, but started flashing. It was like 205%. And aggressively saying that it would be very out of the ordinary for us not to see a major crash or correction soon.
Yeah, it's inevitable. We have these slow grind up, and SPY recently just gives us these little 3-day cool offs. It pulls back 2 to 4%, and then we resume the slow grind up. But when we do see, just like Bitcoin did, when we see that shift finally take place into monthly consolidation, it's fast and it's hard and it's seemingly out of nowhere. So we can keep grinding for another few months, but we know to be prepared. At the drop of a hat, things can very quickly change.
I wonder how, obviously, there's no more dangerous words in investing than this time it's different, right? Sir John Templeton, but we've never seen printing on this scale and this level. We've never seen such an established floor from the Fed and from central banks. So I wonder how far they really can push that before there's a major crash, or if those corrections will become somewhat smaller. I mean, I definitely was surprised at the velocity of the bounce last March, in 2020 being last March. I continued shorting, for a good month after the bounce, thinking that it was just, going to make a higher low sort of or a lower high, as you sort of talked about. And it just didn't happen. So I wonder if we're seeing sort of a bit of a different paradigm here with stocks only go up. I don't believe that, obviously. I just wonder if we'll be able to see that deep crash in the current environment.
Yeah, it's the kind of thing where you don't want to be constantly fighting the trend, obviously. Yeah. And it's something that I had to learn with SPY, where it can grind up on low volume. I'm used to saying, okay, we need increasing bull volume if something's going to see continuation and strength. And I've had to rewire my brain because individual stocks are not the same as SPY. I can't treat them as the same. They're different animals and they're different rules. Bulls don't need volume to go up. Bears need big volume to go down.
Yeah, I agree. I spent a lot of time trading the SPY in the past and had a very similar experience, because you're taught, obviously, to think a rise on decreasing volume. And then if you're like me, I like to use RSI and look for divergences with like the most persistent bearish divergences ever. just printing over and over and over again, and it just keeps grinding up, right? So clearly it's not behaving in the same manner as an individual equity where you can get more information, I think, from the volume than you can from the broader market putting their money into this ETF.
Yep, we're on the same page.
Yeah, I totally agree. So what are your thoughts then? You just said, obviously, this could grind for months, but that leads me to believe that you think there's something coming, that there's a crash coming.
It's inevitable. It's the kind of thing where you want to have a game plan established in advance. Just clear rules. If this happens, I will do this. And whether that's, looking at SPY, like I said, I use the EMA 12. The weekly EMA 12 now has held every single test for 9 months. So when that level is lost, for me, that's going to be a big, red flag. This time it's different as far as what the last 9 months have held. So, I watch for things. I've been watching, obviously, over the last 9 months, and it's just been this beautiful dance of rotation. And it's just so...
Yeah, from one sector to another,
It's beautiful to watch. And it's just tech is down and the financial sector's up, and then they swap and the healthcare sector's up. And so for me, it's very notable when we see all major sectors dropping at the same time. That shows me money leaving as opposed to just money, finding a new home. And we saw that very briefly for the first time in over a month on this most recent daily consolidation here. And it was on the drop here when we had a close down at the low, and then we had a big gap down open, but it was very short-lived. But that is one of my signals that, again, I have that little red flag flashing. Okay, pay extra attention, because this signal of, for me, it's healthcare, financial sector, and tech. When they're all at the low at the same time, I'm paying attention. And it fired off for the first time in a long time, but only for one day. It did get follow through with the gap down, but just one day of follow through.
So quickly on your chart, I'm just trying to read it. You have the 12 is the red EMA, right? And then what are you using below that? A 20 something? I can't see the number.
Yep, it's a 26. And honestly, I don't use it much. I use it for crosses. So it's essentially like a MACD, with how it crosses for the momentum shift. But in terms of action off of the EMA itself, whether it's day trading the 5-minute time frame or the weekly time frame here on SPY, I just love the EMA 12. And I actually got it I started trading crypto in 2017, and Coinbase had it as its default. And so I was forced to watch it. And I was just like, this is coming into play a lot. And then I brought it.
Question. Yeah.
I brought it over to stocks and was like, it changed my game. It has very significantly helped me.
Yeah, everybody has their line and their strategy and their tools, right? So like I said, I like RSI, but I don't trade it like in the standard way. I just look for divergences, sort of like you just use the 26, looking for golden and death crosses, obviously, to sort of give you hints. And I can't even remember who it was, but last week I had someone on, they said the same thing about Binance. They were like, I was like, how'd you choose the 8 MA? And they were like, because it was the one that was there. So I figured everybody was watching it and I started to use it, right? So I think it's an important note to everyone. Stick with what you like and use it. I learned trading stocks. So I always looked at the 50, 100, and 200, right? On monthly, weekly, daily charts, on longer time frames, because I figured that's what everybody else was watching, since that's what they taught me, right? The stock guys. So I think there's definitely an aspect of wanting to look at what everyone else does, but it's really whatever works for you. But the 12 is interesting because I didn't realize, you're the first person I've heard who's sort of passionately talking about the 12 EMA.
Yeah, I have, I know people that use the 8 EMA, and I used to, like you said, I used to be 20, 50, 100, 200 for 7 years. That's how I was trading stocks. And so it was a big shift for me to move over to the shorter term EMA. And it really matched my scalp trading style. And that was a big shift because the cryptocurrency boom in 2017 gave me more capital to allow for this shorter term day trading style. And the EMA went well with that.
Right. EMAs are better than MAs for scalping because they're obviously prioritizing more recent price action, and shorter moving averages are much better than longer. You don't want to use a 200 MA if you're trying to scalp, right?
Right.
But what's interesting here, so you show this drop here below the 12 that where you just circled. Would you theoretically have viewed that second green candle as a short because it's testing the 12 from the bottom? Is that a high risk reward short because, obviously if you close above the 12, you exit, you say I was wrong? Or is that the sort of trade that you would take? I'm curious how you use this.
Again,
when I look at that, I would see the breakdown, and then I would short the retest.
Honestly, if it's an individual stock, I absolutely look for a lower high compared to where we came from. But knowing it was SPY, I just went back and looked and saw V-shape, V shape every other time it happened. So I wasn't too giddy to try and short this move. And I honestly was favoring, we can very easily see another V shape bounce because we just bounced off the weekly EMA 12 yet again. And so knowing it was SPY, I adjusted what I normally would have looked to do if that was, Apple or an individual stock.
I would love to line up the reverse repo or repo markets with these V-shaped moves right here and see what was happening with liquidity at those moments.
Yeah, it's wild to observe. And honestly, the recent past helped a lot with this one to not get overly bearish and to be ready for a V-shaped bounce.
So is there an indicator that's not the 12? Since obviously your bias here was still V-shaped bounce, V-shaped bounce. What's going to give you that macro sort of bias switch that's going to make you turn?
Give me a confirmed daily downtrend. Give me the initial wave of fear, fail the high, and confirm the downtrend, which again has just failed to happen every time. And if you do that and lose the weekly EMA 12 because a daily downtrend's been confirmed, then okay, I'm paying attention. This is different than the last 4 times it's happened.
And for you, is that an opportunity to take scalp shorts, or is this like a fully fundamental shift for you and you're like exiting your positions and moving into cash and looking for lower entries when the dip finally ends? What's your strategy there?
I would be swing trading bearish there, which I don't do very often. I don't swing trade often in general. I love being cash and sleeping like a baby. But when that happens, I will be a lot more prone to be holding bearish positions for monthly consolidation in the S&P 500.
Makes sense. So, and I'm curious, do you do that straight through shorting? Do you use reverse ETFs, inverse ETFs? What's your instrument of choice if you're trying to short the market?
I've done both. I'll short SPY or QQQ, but then I'll do SPXS, which is the 3 times leveraged inverse ETF. So I'll do a few different ways. And honestly, I'm not sure in the moment what determines which I choose. Yeah, but they're fairly similar as long as, my capital size aligns with the 3 times leverage versus the non-leveraged.
Sure. So I'm curious, you approach Bitcoin the same way then? You're in and out into cash, hopefully, when you're sleeping. You're not a Bitcoin holder in that regard?
Well, I am. I have to have long-term no-touch positions, and it's very important for me to psychologically detach that. And I have my investment, and it's $0. And that's how I account for it in my net worth, $0. And someday, maybe in a decade, then it will add to my net worth, and that'll be great. It'll be a big bonus. But complete emotional detachment from that investment. And then I have swing positions. So I am in a swing position on Bitcoin from that monthly high or low. And again, it was the growth stocks that helped me begin establishing this position. And it was the break of 30,000 where I said, okay, I'm going to start establishing, this monthly high or low attempt. So I've got long-term no touch. I've got monthly swing position, and I'm still in that position. I did take a little bit of profit this past week or last week up in the upper 40,000s. Again, just seeing this 70% move and saying, well, it's a little bit extended. I'm going to take a little off. And then everything else is day trade. I love oversold bounces, and I do use the RSI a lot for oversold bounces. And when you got these names like Cardano that are in blue sky breakout, a very high probability trade is what I call a back burner trade, which is when you're coming from all-time highs, first 5-minute oversold and first hourly oversold are very high probability bounces. And it's gotten so known that people are front running it, and they're bouncing now from 32 RSI. And it's not quite getting under that 30 level. And just looking at Cardano on the hourly here, we dropped down, and you can see when we were at the low of this wick, we were just kissing 30 RSI on the hourly, and that set the daily high or low, and here we are up 15% from there.
Yeah, I mean, I've got the ADA chart here right now. I mean, it doesn't take a rocket scientist to say this thing went into price discovery. Let's buy the bounce on the previous all-time high. And I drew that a few days ago. It didn't even break, but here you go, right? I mean, it literally came right back down to 247 all-time high, oversold, as you said, right there, and bounced. That's about as easy of a setup, I think, as you can pretty much get in this world.
Yeah, it goes back to 2017 where I had friends that weren't traders, and I said, when this little line on the 5-minute time frame gets under 30, buy Bitcoin. And for that run up, it was just money every time. And I think that, in price discovery, it's so powerful. I was talking on a different show yesterday, and they said, well, Cardano hasn't done much fundamentally, blah, blah, blah. I don't care. If it's blue sky bull, it is the leader. And every name that hits a new all-time high is beneficial for Bitcoin and the crypto space as a whole, because it shows confidence and those profits rotate around. So there, a lot of people on social media get very defensive about their favorite crypto, but it's really a team game here. We want all the cryptos to be doing well together if we're going to keep confidence in the space as a whole.
Yeah, I mean, maximalism is great for kicking the ball forward, but it doesn't work very well for trading. It gives you an emotional bias. It's you cannot detach from obviously the reality of the chart. So yeah, I could agree with that. And we've seen a lot of these moves in the crypto space of late, right? ADA just retested its all-time high support. Solana basically did it. Luna basically did it. And we're seeing a few that have the potential to do it as well. I mean, yeah, you're looking probably on the monthly there. I could pull
that's
up
the daily of Solana.
There you go. Yeah, so you can see that that's going absolutely nuts. But it never came back actually, but on the Bitcoin pair it did. It came back for the retest. I look at the Bitcoin pair before I look at the USDT pair.
Oh, so, me too. Yeah. I have this past year has been such a learning experience for me, watching those correlations. And for me, I just call it the spotlight. When the Bitcoin pairing and the US dollar pairing are directly correlated and they're doing the exact same thing, it means pay attention to this coin because it has everything going for it.
Yeah, Solana didn't get all the way back down on the USD pair, but here you can see on the Bitcoin pair that it broke here, tested literally to the SAT, then right back up into price discovery. I mean, this is now the setup I'm looking for in general, which is interesting because for a while there, it was like the new coins and you were looking for the massive rounding bottom that just sort of went absolutely flying. And now you're trying to find the all-time highs as support, in my opinion. Like you said, it's blue skies. Fundamentals are completely irrelevant. And I think you can have a fundamental thesis for an investment, but certainly not for a trade.
Yeah. In 2017, I read an article about Ethereum and said, oh, banks are interested in Ethereum. I said, okay, I understand half of what I just read about what actually Ethereum is. And I looked at the chart and I saw blue sky breakout. And I said, well, I know what that means. All right, let's go. I'm in. And that was a huge factor for me getting involved in the space, was just that these names were ready and in all-time highs. And that gave me the confidence as a technical analyst. And, the fundamental stuff, admittedly, a lot of it is still very much over my head.
Yeah. So I'm interested, you kind of talked about your portfolio breakdown, which is somewhat similar to mine. I mean, I kind of grew up with the classic 70% holds, 15% cash, 15% trading. Obviously it alters from there, but I have sort of that ingrained in my mentality. And just like you've got your long-term holds. You don't even count them. You just check it every year, 10 years or whatever. But how much of your portfolio do you generally trade with or recommend to people that you're teaching?
Well, it's different for me, being 11 years into trading, I use a lot more cash as far as just being in and out and constantly moving it around to different places. I took my crypto profits from 2017. I moved it to marijuana stocks as Canadian marijuana was exploding and compounded gains. So I really like the agility to be bouncing around all over the place. But that's not for everybody. If someone's on year 2 or 3 trading, I'm certainly not going to be suggesting that they have the vast majority of their cash for day trading. That wouldn't make any sense. So definitely I would say a lot more. It also depends on, again, the breakdown between stocks and crypto. If you're trading stocks and crypto, you need a little bit more capital to be playing with. And if you're only focused on crypto, then you can have, larger, longer term holdings and position size. And then you can break it down, individuals. Do you have a family? Are you 25 years old and you're only worried about yourself? Do you have a house and a mortgage? I mean, there's so many factors as far as how that breakdown would look.
Absolutely. So talk to me. I think you're a day trader. I love that. I've been there. Talk to me about what your day looks like. What do you do when you wake up? What charts do you look at? How do you then identify what you're going to trade that day? And how do you manage that trade, if that's even a thing, or do you have a plan in advance? And at what point do you close and say, my day is over?
So I do all my prep in the morning. So I wake up at 6 every morning and I'm on the computer by 6:10. And I'm looking at everything. I'm looking at crypto first, and then I'm looking at commodities, and then I'm looking at the broader market. And I actually do a little whiteboard for our members where I'm just going through and writing a little paragraph on everything. And that just ensures that I literally looked at every single chart heading into the morning. And that's important because I can then later in the day, I know what the daily chart looks like because I looked at it in the morning. It's nice and fresh. and that helps me be a little bit quicker with things. So as far as establishing trade game plans, just an example, Netflix was giving me a cup and handle on the daily time frame before yesterday, and I was just viewing this as the left side of resistance and our cup here. Gotta turn my magnet off. And then we failed to break resistance, little bull flag, daily inside bar yesterday. So I said, this is a cup and handle. We're watching for Netflix to break the daily inside bar and break 555 resistance here. And it's definitely given a good bit of the morning move back. But this morning, it was just a raging bull confirming pretty much 3 resistance levels breaking at once. So, I had that chart in mind in terms of, okay, this is something I'm going to be focusing on for the next few days to see if this daily bull flag can confirm. And so I just find setups that I like. And I do ticker requests from our members on live stream. And that's, I've never done I can't remember the last time I did a stock scan. That's my stock scan. People ask me.
I do the same thing. Every Wednesday, I do like 50 charts, and that's my ideas for the week.
Right. I pick the ones that I like from, what's being thrown in front of me from everybody else. And that is a great way to say, well, I know this setup. I like, falling wedges, and this is a good looking falling wedge, or whatever my edge is as a trader. And so that interaction with other people is paramount to finding key setups. But again, it all boils down to having the complete picture of what's going on in all of these places. And it's one thing that I tell my viewers, if you're trading crypto, watch the broader market. And I try and encourage people to just, have as much exposure to both things in terms of their attention span to have a complete gauge of what's going on in the financial world.
And what's your view then on the correlation between Bitcoin and other markets?
It's definitely there. I mean, fear. When there's fear is contagious. And that is when correlations are most significant. And when there is fear, you can watch, SPY on the 5-minute and Bitcoin on the 5-minute. They're the same charts. They're doing the same thing. And so it's, again, when that fear picks up, which we aren't used to because SPY has been 9 months of straight up, we need to be paying attention to everything, because that's when a lot of fundamentals can quickly go out the window. And, back in the COVID dump, crypto got smashed, and it obviously recovered very beautifully. But there was a period there where fear was contagious, and that correlation led to a big time drop with the broader market. So
effectively, you view them as correlated in a risk-off environment, and then sort of they can have their freedom when it's back to risk on. I mean, so it's sort of a time frame preference, right? Because if you're looking at it over 10 years, they're pretty uncorrelated. But if you're looking at it over 10 days in a major correction of the stock market, you're likely to see a sell-off everywhere.
Exactly. And the more, if we get an ETF and the more there's this intermingling of, institutions, I think the correlation will be a little bit more significant. I think it'll pick up a little bit, but that remains to be seen.
Talk to me about how you would trade this cup and handle, because that's obviously not an intraday trade, right? That's a multiple day trade. This is a pretty big pattern. It's, hard for me to tell, but over a month for that cup to form, obviously you have I would imagine, a relatively higher target than the current resistance.
Yeah. So I would say, I have the daily inside bar from yesterday, which shows us the tightening range. And I can just make a simple statement. If this low of 545, if that holds, it's a bull flag. So as soon as this inside bar breaks bull, that can trigger an entry. This is the stop level in terms of, okay, if that level breaks from here, that's obviously a big red flag as far as follow through. And for me, if I were going to be looking to swing this for a prolonged period of time, I would take some profit. I love being in risk-free positions. So if let's just say I enter on 550, or it was 553 was the high of yesterday. So if I enter on a 553 break and my stop's going under this low of 545, that's an $8 risk. If I sell a partial position, $8 to the upside of 553 at 561, even if I sell half the position, I'm now risk-free. Unless there's a big gap down.
Money. Right. House is money.
Right. So I love being risk-free. And so that's something I would do. Initial move, the 5 and 15-minute RSI got absolutely insane first thing this morning. So we know consolidation is going to take place. So that's something that I would look to do and just say, okay, well, now I've got house money and I can just let this trade ride as long as it keeps printing, a daily uptrend with higher lows and higher highs. And at this point, we're looking back to the all-time high. We got a couple little resistance levels left here, but not a whole lot until that 593 all-time high.
Yeah, invest, trade Netflix as well. So I've been watching that as well, but not as closely as you. And I wasn't even watching for that cup and handle. But yeah, so, and do you generally move up stops since you like playing with the house's money, obviously? Do you have a certain level, like you get to the next support, move your stop up to the next support level, or lock in, or do you prefer to lock in profits and keep your stop where it was?
If the most likely scenario is a lower high, so say it's a big retracement, and I'm looking for a lower high, then I'll be locking in profits into the strength of that move.
Yeah.
But if it's something like, well, maybe Netflix can hit, blue sky again sometime in the next couple months, then that's something I would try and let ride a little bit longer. And I might leave my stop, at that break-even level for a while. One thing that I do is I lock in profit really fast, and that helps me with my day trading. But again, I got to shift that mindset for when it's a swing trade and let the move play out longer. And that's something I've been, practicing and working on over the last few years to distinguish those two different mindsets.
So you obviously have this longer-term vision for Bitcoin if you have an investment portfolio and you're talking about what it could be worth in 10 years. So beyond even the next few months and seeing potentially that symmetrical triangle form, what are your thoughts on Bitcoin for the long term?
I mean, it definitely has a whole bunch of momentum behind it. And again, just the more institutional exposure we get, and the more, even this whole aspect of Salvador and other countries, if other countries start jumping on, there's a headline about Cuba recently. I mean, I just fully accept that I have no idea, and it can be way more than I could possibly think. And I just have to look back at the last 20 years of any of these stocks and say, well, I wouldn't have held any of those. And so that's, my lesson. Hold something for 10, 20 years and see what happens.
Yeah, I had, I don't know if you're familiar with Mark Yusko, like the North Carolina guy, who the head of Morgan Creek, huge, obviously, a hedge fund, and they have Morgan Creek Digital with Pomp and Jason Williams. But he told me a story about Amazon to the same point of what you're talking about. And he said, how many people do you think are currently holding Amazon stock that bought the IPO? And I said, I don't know, 20, 30, 100, 4. And I said, okay. He said, Jeff, his wife, and his parents. And he's like, that is literally it. They're the only ones, because every other person obviously had some moment where they had weekends and they were shaken out. I mean, you forget that obviously Amazon had a 95% retracement and it was just an online bookstore, right? At the time, you couldn't see what it could be. But exactly to your point, I think Scaramucci, I talked to him, he had the same point. He's like, I bought Microsoft in the early 90s. Like, I've never sold it. He's like, through all this time, it's been really good. I like to look for something and buy it for 40 years. So hard with stocks, but for me, it's much easier with Bitcoin.
Yeah. And that's, again, you have to detach, and you have to have that psychological no-touch mindset. And it's very important to have that, because otherwise some emotional event will take place and that will be enough to change your mind. But if it's no touch and that is it, then that's how you hold long term.
Yeah, I think that's the beauty of having a pretty robust security network for your Bitcoin, is that it makes it really, really hard to make emotional decisions in the moment, because you just literally can't do it, even if all these steps. Like, how many places do I have to drive, and so safety deposit boxes do I have to go into, and friends do I have to call to piece together so it's an interesting part. But I'm curious if there's anything that would change your long-term thesis for Bitcoin. If there's something like some event you could see where you'd be like, oh, this is done. I want nothing to do with this. I
mean, I don't fully understand the role that quantum computing could play. If there were something, that in that world that completely shifted the fundamentals, then that would obviously have me taking a second look. As far as, the US cracking down, as unlikely as that is at this point, if they went on if we become a dictatorship, and I don't know what the political climate's going to be in a decade, but those are two low probability scenarios that would have me take a second look.
Yeah, so I was on a stream about mining a few hours ago, and they asked me basically the same question, because I do some mining. They were, what would cause you to stop? And I was like, maybe a fundamental attack in the network that literally broke the network and no longer was it a secure network, and my entire premise about what Bitcoin is and its purpose was violated. I think something like that might do it. But short of that, I can't imagine really changing my thesis, knowing that the Fed is going to keep printing.
Yeah.
right? I mean, they're not going to stop. So if you believe that Bitcoin's a hedge against inflation, I don't really see how you ever sell it.
Agreed.
Yeah. So, but it's always good, I guess, to at least have an idea of some crazy thing that could happen that might change your thesis, right? Otherwise, you hold to death, even if it's completely broken. You talk about quantum computing. I love that argument. It's so funny to me because, sure, I think quantum computing could certainly be a risk to Bitcoin, but if it's a risk to Bitcoin, isn't it a risk to literally everything that's encrypted everywhere? Like, I mean, I'd be more worried about like nuclear weapons being fired off by someone in control of a quantum computer than the Bitcoin network failing. Right?
Yeah, I mean, it's another one of those things that's over my head to a certain degree, and I know just keep an eye on it because it's fascinating to read about the possibilities of what quantum computing could do over the next couple of decades. But yeah, it's, as you said, it's very important to have game plans established for all, whether however low risk it is. You have to prepare for every scenario and just have. It's so much easier to go over it as a fantasy as opposed to now you're smashed in the face with the reality and needing to react.
So do you mind pulling up maybe the hourly Bitcoin chart and tell me what you're looking at and what you'd be looking for to establish a position in the short term?
So it has been that we've been getting these megaphone patterns, which I am admittedly newer to and now in the process of rapidly learning. And they are just, I mean, it's an exchange's dream because you break support and then you break resistance and then you break support and then you break resistance and then you break support. So it is just stopping out everybody on both sides in the short term and racking up those exchange fees. But we just have been printing a bunch of these patterns. We just came out of one down here, which is a good sign for the bulls. And this was the reaction, in my opinion, to Powell, and the stock market finally got us over this level here. So at this point, 4-hour higher low. I like the 4-hour time frame a lot, and we built a little base of support down at 46.3, and we've got our resistance up here at 49.3. And if we tighten up a little bit, pull back, this is a scenario where an aggressive bull is going to be looking for an entry on the pullback. Maybe you put your stop under that low there if you want to limit your risk a bit, because the bulls will need to confirm a 4-hour trend change if we're going to head back up to that recent high.
And for you, does that confirmation come with a higher high, like higher than that red candle a few over to the left?
A lot of it has to do with, the amount of retracement that we see. So if we see this solid move, and if we were to top out now, if we form a little bull flag, if we retrace 30, 40% of that move, then that's enough for me to say, okay, well, I'm going to scale in a couple positions, have my stop down here. And I personally prefer to enter, before the confirmation takes place, because at that point, my stop is so much further away, unless I wanted to use the new 4-hour higher low as a stop. Really what it boils down to, and the first question that I tell people that they need to answer themselves is, am I looking to be conservative or aggressive? Because that's going to determine what time frame you're looking at. That's going to determine how aggressive you're entering these positions, because people have very different places of where they are in their trading game. And some people are conservative and want to be sure of a momentum shift, and other people want to be real aggressive and go for the bigger wins, obviously having some bigger risk at play. So a more patient bull would be waiting for 4-hour trend change confirmation, and a more aggressive bull that's not already in would be looking for an entry on that consolidation.
That looks perfect. So first, guys, everyone in the audience, if Dan's okay with it, I'd love to open the floor for questions. I think
Sure.
They can have the opportunity to ask you some questions. So we'll keep talking, but feel free to ask questions because you have a lot of fans here. I can see Dan guy's on another level with his TA and Insight. There's like 100 compliments here. I can't even, I'm scrolling back through them and I can't. I think someone said that you were a genius and I was a nerd. Sounds right.
I'm flattered.
Dan's awesome. Wolf is a nerd. I cannot debate that. So guys, yeah, if you guys have any questions, please let us know. We've got some funny quotes over here too. Know when to hold them, know when to fold them. Kenny Rogers is exactly right. And so do you trade through the weekend, crypto? I
will, if the setup's there. I mean, honestly, I am my most aggressive when there's fear and I'm playing these oversold bounces. That is my edge as a trader, just these oversold bounces. And so we're obviously in an environment where we're only getting those on shorter term timeframes. So I am trading a lot less. And honestly, fees, I'm coming from the stock world where I can move big capital for free back and forth throughout the day. And if I were to apply that to crypto, I mean, the fees would make me throw up. So I do approach things with a bit more of a swing trade mindset these days. And that is keeping me trading less in the cryptocurrency space. But at this point, what would I want to see to be looking to trade this weekend? Again, if I didn't have a swing position, I would be looking to establish a position off this daily higher low that's attempting to form, just in case we see another leg up into the lower 50,000. So I would definitely want to have some exposure if I was not in these. And that's I call these positions that I have my anti-FOMO positions, because I can say, okay, well, I got my long-term no touch. I know that's going up. I've got my monthly higher low swing position. I know that's going up. And it really helps keep me very patient in terms of not trying to rush in and grab these bull moves. And obviously the last thing we want to be doing is buying the top before weekly consolidation. And that's keeping me a little bit cautious. Again, as I mentioned,
Right.
A higher low every week for 5 weeks after a 70% move, when I'm anticipating a monthly lower high is the most likely scenario, just has me a little cautious up at this range.
I mean, everybody seems to be looking to 40 to 42, 40 to 43 for retracement and bounce. And the crowd rarely gets what it wants, but that
Right.
seems to be kind of
usually the more people that are looking for it, the less likely it's going to happen.
Well, either it gets front run or it nukes right through to like 38 in 1 hourly candle.
Yeah.
It takes out everybody's bids who have been sitting there. Got a couple. Well, so trading less is a good thing. I can only speak to myself that, yes, I find that when I trade less, I actually make more, but I don't day trade as much anymore. I always kind of joke that the more trades you take is the more opportunities to lose money. So
I would say
that keeps you in a mindset of proper risk management, that I view every trade as a potential loss. So it kind of, I think, sharpens my edge for what trade I will take, and it stops me from moving my stops.
Yeah, definitely. You want to know your maximum risk on every trade before you take it. And then you accept that, okay, I'm risking this many dollars. If I stop out, I will have lost this many dollars. This is what my account will look like. And you fully know in advance, worst case scenario, what would happen. But it really, the majority of people, definitely less trading is a good thing. But if you're a professional, then trading more is definitely a good thing. So I am, I've dedicated 11 years of my life, an insane amount of hours to becoming a professional at trading. And so for me, I'm letting it fly often in terms of how often I am trading. Not an insane amount, but and again, in crypto it's less, but I would say if you are in year 1, 2, 3, 4 of learning to trade, then definitely, take your time. Less is more. This is a multiple decade game. This is a marathon, and we're learning skills to benefit ourselves for the next 10, 20, 30 years. So patience.
Absolutely. So you hate the fees, obviously, on centralized exchanges in the crypto space. Have you, by any chance, gone down the DeFi rabbit hole and paid Ethereum fees? Because it's a hell of a lot worse.
Oh man, I have not. And honestly, I'm picky because I want FDIC insurance, if I'm going to feel safe, and I want liquidity. So in the US, if I'm looking for those two things, my options are just so limited.
Yeah, it makes perfect sense. I mean, there was a time at the top of the bull run where, Ethereum transaction or trade would be $200-$300, even if, for your average person who wanted to buy a $50 NFT or something.
Oh, man.
Absolutely astonishing that they could get away with it. But more fees will certainly make you trade less. Any chance Bitcoin goes to 43K before noon? I think we were just talking about that.
Yeah, that's absolutely on the table as a possibility for sure.
So I'm looking through the questions over here. Some traders tirelessly cut emotion off, but Dan is really great with Kirby emotion. Who the F cares? Traders ain't no monks.
And that's a lot of people when we talk about emotions, they think like, I'm feeling this emotion, it's a bad thing. But not necessarily. I mean, I feel FOMO. I can look at a chart and feel FOMO, but it's the importance of zooming out and recognizing that I'm feeling FOMO. Because I zoom out and say, I'm feeling this way, I should not act on that. And it's the same thing with any emotion in life. If you're in traffic and you get angry and you start swearing at the guy, you want to zoom out and say, what am I really doing here? And analyze the situation. And the time it takes for you to do that, it de-escalates, the emotional reaction that you're having. So self-awareness and, constant reflection on what's going on inside your head is very important for trading.
Do you have any rules that you've established to help you avoid those situations? I can tell you for me, I talk about this all the time, but revenge trading used to be a huge issue for me. So and this was before I was obviously looking at charts for the entire world and just for myself. But my rule used to be that anytime I closed a trade, whether profitable or at a loss, I wasn't allowed to open that chart for 24 hours.
Ooh, that's a good one. That's a lot of discipline right there. For me,
really hard.
I have levels. I have a goal. I want to hit this many dollars every day when I'm day trading stocks. And if I lose a day maker level, then I'm done for the day. And that's just an automatic stop level for me, and then start fresh the next day. Because I used to play poker back in high school and into college, and there's a lot of overlaps there. But going on tilt and just giving away your chips as fast as possible once you start that snowball downhill. And so you have to cut it.
I mean, we've all been there, right? You set your stop loss. You actually believe you have the discipline to keep it. Your stop loss hits, and then you re-enter immediately because, of course, you think price is going to rocket the other way. So even when you're strong enough to keep your stop loss and not move it, you re-enter. Your stop loss was perfect. Price goes down. Or my favorite to the upside is right after taking profit, you decide, I should have held. It's going to go higher. And then you re-enter immediately right back down to your original stop.
A big one for me was partial positions. So once I started, exiting a little bit, and psychologically, if I exit half a position in profit and it starts pulling back, I say, great, I took half of my position at the right time. And if it keeps going up, great, I still got half of my position. And that's a way that you can, look on the bright side, no matter what happens after you take partial positions off the table.
Everything partial. Every single time you sell even the littlest amount, it takes so much stress and pressure off of every future decision. It's like compounding the minimalization of your stress. Someone said, do you think there's a dead cat bounce or bull run 2.0?
Too significant to be a dead cat bounce. I mean, the retracement size off of that low. I mean, comparing it to, like I said, NIO. This monthly move on NIO, the retracement here was about 65, 68%. And here's Bitcoin retracing very similar amounts. But when I look for a bear flag, I'm looking for a retracement here that is 382 or less. So I'm pulling it up and I'm saying, okay, we pulled back. And if we had bounced and rejected around 42, 43, that leaves the door open for a bear flag. But as soon as you go 50% plus retracement, then the most likely scenario is you're going to form a higher low on the next pullback. So for me, it's too significant a bounce retracement to call it a dead cat bounce.
100% agree that for me, once it crosses 50%, the flag is completely invalidated, or the idea. I guess not saying you still can't go down. You're just not going down because of a bearish consolidation.
And you can't go down to a lower low after 50% retracement unless there's increasing, very notable bear volume. Whenever it's the less likely scenario that's taking place, volume is behind it.
Perfect. What profit percentage do you typically aim for to lock in with Bitcoin swing trading? Thanks.
It depends on the setup. I mean, a monthly bounce, I'm looking for a lot more profit percentage than I would be for just a daily oversold bounce, because it's a longer time frame and I'm looking for the trade to play out further. So it's something that you want to have established as part of the trade game plan. Before you ever click the buttons to enter a trade, you want to know where you're looking to enter, obviously, where your stop loss is going to be, and what your target is. And that helps you gauge risk and reward. You always want your potential reward to be more than your potential risk. And so for me, when I entered Bitcoin on the break of 30,000, looking for the monthly bounce, I had a rough target. I was eyeing, the upper 40s, the mid to upper 40s was just my rough target. And so then once we got towards the upper 40s, I've started to take a little bit off. I've still got half of my Bitcoin position and 2/3 of my Ethereum position from that monthly higher low play, but we were reaching my targets. So now I'm just patiently watching and saying, okay, am I going to exit all of my positions for a monthly lower high? I'm not seeing enough out of the bears on the daily time frame to cause me to take those actions at this point. But again, I'm watching for that monthly lower high, and the next few weeks, well, I won't say the next few weeks, the next 2 months are going to be very key, because again, weekly consolidation will not surprise me in the slightest the next time it happens. But what would surprise me would be losing a weekly higher low, whether we bounce and then can't see any follow through and then lose weekly support. That right there would be our monthly lower high being set. Or if our weekly retracement were significant enough that we set a lower high and then confirm a downtrend, there's our monthly lower high. So again, that's something that I'm just taking it one day at a time. Every single day we get new information. And so these people that make predictions, that's great if you want to make a prediction and stand by it. But I find that so counterproductive when you are literally foregoing information. You can you can change your mind. You can act to new information. And I think that, having that stubborn prediction mindset hurts a lot of traders.
Strong opinions weakly held. I wrote
Yes.
about that today. You could have a thesis, but you have to be able to obviously change. Even like some of the most bullish, notable people on Bitcoin in history were naysayers in the past, including Michael Saylor and Paul Tudor Jones, all these guys. You have to be able to change as a trader or just as a human being when you have new information, right? I mean, it seems obvious, but people are so stuck in their biases that it rarely happens. Some book recommendations from Dan. Do you have any books that you love to recommend?
So completely honest, I've never read a book about trading. It's just not my learning style. It was all articles, YouTube, all the internet. People really like Trading in the Zone by Mark Douglas. That gets mentioned a lot. But honestly, for me, it was books having to do with psychology. So The Power of Now is a book that had a very significant impact on me as a person and me as a trader. And another one was the Taoism of Pooh, I believe is what it's called, but just breaks down. Yeah. So there's a lot of books out there that don't have anything to do with trading, but can be significantly beneficial.
I agree with that. I think the psychological side is probably more compelling than learning how to draw your lines, right? It really is. And what you were talking about with emotion earlier was really interesting to me, the question that we had. I had a woman named Denise Shull on my podcast. I don't know if you ever watched the show Billions, but the character Wendy Rhodes is based on her, the like hedge fund psychologist. And she said the same thing as you. She said, a lot of us as traders, myself included, talk about you should be a robot and you should eliminate emotion from your trading. And she said that's unrealistic and not possible. It's about controlling it and recognizing it, not eliminating it, and being able to react appropriately.
Very much on the same page. Yes.
Yeah. What's your longest ongoing trade?
The crypto no touch positions from 2017. Yeah, I've never held anything for 4 years.
Oh, there you go. So everyone is calling for 100K, including you, Scott. And it's so rare for everyone to call moves that play out. Yeah, I'm calling for 100K, but I don't put a time frame on it, right? And I think that I would be equally pleased if that happened in the next 6 months as I would if it happened in the next 3 years. So to me, I don't think that's to me, when you're talking about a prediction, Dan, I think it's more of a prediction that's tied to a time frame, right? And we get that question every day. What will the Bitcoin price be at the end of the year? I don't know. I don't have a crystal ball. I have no idea. But people want, that's sort of that short-term bias that people have. They want they want to know what their gains are going to be right now. I think it'll easily hit 100K. Even if Bitcoin effectively stayed flat and they just kept printing money based on inflation, Bitcoin should get to 100K, right? I mean, very easily, in my opinion. So I don't think that's crazy, but I'm not telling you it's going to happen next month.
Yeah. Trying to time the market is certainly very tricky. And that's honestly, options. I dabbled with options for a while, but to be losing when I'm right, but just wrong on the time frame, for me, I'm sticking to common shares.
Yeah, to me, I'm the same as you, actually. I don't trade options. I trade common shares. And that was sort of what eventually steered me away from leverage in the crypto space as well, because there were so many times when I was right on the trend or the idea, and because I was using leverage, I was tightening up my stop too much or my position sizing was slightly off. I would much rather be able to weather the storm and be right on a longer time frame than have to, scalp my way in and out and keep losing when I'm right. It's just like you said. There's no worse feeling than seeing price continue in exactly the way that you planned and you're not in the position anymore because you stopped out.
Yeah.
Absolutely atrocious. I'm just trying to read more over here. Jason says good retracement somewhere between 30 and 60% pullback. Maybe, but I mean, we kind of just saw a 30 and 60% pullback, right, of this entire market. So I don't think we need to drop necessarily. I don't know if you've seen this. I noticed you use linear charts. I use logarithmic charts, but this is the most compelling Bitcoin chart for me, which is this monthly since 2013. I mean, this is when I make the case for six-figure Bitcoin. To me, it's, low, high, obviously higher low, higher high, higher low in March, and flipping the EQ of this channel and heading up. I mean, when you zoom out, like any market, it just goes up, right? I mean, even if we talk about the Warren Buffett crash that could come, that doesn't mean you think that the stock market's going to top forever.
Oh, no, it's going to set a monthly higher low. There's so much space for it. I mean, it's just like Bitcoin just did. We pulled back a very significant amount, but it was just a monthly higher low.
Yeah. So I think that's important for people to realize. If people make high price predictions, if you zoom out enough, any market that has, the Lindy effect or Metcalfe's law network effect, it's the longer you're around, the longer you're likely to be around. The argument for Bitcoin to go to zero becomes more absurd the longer that it sticks around. Now, I think it's mature enough that you can start to look at, the Dow Jones history and start to apply it to the idea of what could happen to Bitcoin, and markets just go up. They just go up because of inflation.
Yeah, that's something, my dad throughout his whole career working a 9 to 5, just put money in the market, don't touch it. It always goes up. And that was really hard for me to grasp, but just, observing it, it's definitely a real thing.
So here we're coming up to the end of time here. Is there any last thoughts you want to share? Definitely tell people where they can follow you and keep up with you after this, but not sure if there's anything we didn't get to that you'd like to discuss.
No, yeah, check us out, Chart Guys, on YouTube, chartguys.com. Put out a lot of videos on the broader market. I'm going to put out a video on the marijuana sector over the weekend, and just staying in tune with all financial markets. And
is it primarily YouTube for you guys? What other offerings do you guys have?
Yeah, we're on Twitter and YouTube and all that. We have a subscription service where we do live streams 3 times a day, and we have a chat room community. And people love that. And it's great to interact with everybody and, have so many different eyes on the markets and exchanging ideas. And I'm learning so much from people as they're learning from us. So it's really a great beneficial environment.
Well, I can see a lot of people showed up for you, and definitely the comments have all been extremely heavily favorable, and people seem to absolutely love it. So thank you for taking the time to do this, guys. Once again, I will be back at the same time on Monday, 1:30 p.m. EDT, and every weekday morning at 8:30, I do my news updates. And once again, please check out Superbid, brand new sponsor. Really excited about what they've got coming, and that is down in the description. Guys, I hope you all have an amazing weekend until next week. Peace.
Let's go.